Hello, and welcome to an Access to Capital webinar. Show me the money. Now that we've got your attention, what we're going to talk about today is access to capital. We are Access Florida Finance Corporation. We're part of the Florida Finance Network. We're also in it with other organizations. We're going to talk a lot about what we do, but I want to spend just a couple moments here talking about some of the other organizations in the network and what they do, if it's applicable to your small business. The Florida Development Finance Corporation, which is the second logo at the bottom of the screen, does industrial revenue bonds. It saves money for small businesses by combining bond issuances into one issuance to save on legal and consulting costs to give small businesses the same benefit of industrial revenue bonds without the cost. The Florida Export Finance Corporation is in business to provide short and medium-term letters of credit and other financing assistance to Florida businesses that are engaged in exporting. Florida First Capital Finance Corporation is the state's preeminent SBA 504 lender. The 504 is the SBA's commercial real estate product. If your business owns a building and is at least 50% occupied in that building, or you plan on buying a building that meets that definition, the SBA and Florida First Capital can finance you. That can get you into a commercial mortgage at a very low competitive rate or at a 20-year fixed rate. The last one is Neighborhood Lending Partners, which is engaged in working with residential real estate developers and providing low to moderate income housing. That's the Florida Finance Network. But we are Access Florida Finance Corporation. My name is Mark Scovera. I'm the president of the organization. My background is in finance and accounting. I've got over 20 years experience and in terms of business and loan underwriting, and I'm happy to work with you in terms of your small business and your needs for a micro loan. And very proud to be a member of the Access Florida Finance Corporation organization. Native of Michigan, but spent the last 10 years in Florida working with small businesses almost exclusively. Also, I have my vice chairman, Dr. Carlton Robinson, and I will turn it over to Dr. Robinson to do a brief introduction of himself.
Thanks, Mark. I'm Dr. Robinson. Currently, I am the Senior Director for Entrepreneur Growth with the JACS Chamber. Previously served as the president of the First Coast African American Chamber of Commerce and an entrepreneur and small business owner as well. And so I think collectively that experience gives me a background to help support and educate entrepreneurs.
Thank you, Dr. Robinson. Well, let's get into the presentation. First of all, I want to start off with what our mission statement is. You can find this on the homepage of our website. We provide access to capital and technical assistance to Black, rural, and small businesses throughout Florida and the nation. We foster economic development and job creation by the use of federal, state, and private community-based programs and in coordination with our strategic alliances. So really what we're all about is access to capital and providing economic growth. We are an economic development organization. What's an eligible project for us? Well, we love commercial real estate acquisition, improvements, or construction. That's probably the number one thing that we do. We also work with machinery and equipment acquisition if that fits your business. Community development projects. We're going to talk a little bit more about that later, but we're big into developing blocks that are underdeveloped and providing economic stimulus to make them grow. We're all about creating or saving jobs. We look at our loan applications, and when we see creating jobs or saving jobs, that translates into economic development for us. Franchise acquisition. This is one that we're big into because when you are interested as a business owner in obtaining a franchise, you work with the franchisor. Gain eligibility, we can come in on the back end and provide the necessary liquidity for you to run your franchise. If you want to buy a business, expand your business, or merge two businesses together, we can work on that deal with you. Pollution control. I mean, if there's anything that's environmentally friendly, that's an eligible project as well. Transportation services, providing bus service, taxi service, that type of thing that helps move people around in an efficient and environmentally friendly manner is something that we can do as well. Working capital, which is basically the catch-all for anything else for business purposes. We also finance startups. This is a question I get a lot. And yes, we do finance startups. The only caveat for us, in addition to the other criteria that we'll discuss later, you must prove relevant industry experience. For example, if you worked in a restaurant for the past 10 years as a chef and you wanted to open your own restaurant, that's relevant industry experience. If you worked as a plumber for the last 10 years, you wanted to open a restaurant, that might be a little bit more problematic. And any other special purposes within the scope of our mission, basically anything that's economic development or that we could see would grow the economy. So there's quite a wide breadth of eligible projects that we have available for financing. What are the requirements? Well, we have two different programs we work with. I'm going to talk about the Black Business Loan Program first. And again, we are a business loan program, not a personal loan program. So obviously, the first general requirement is you have to have a commercial business. You have to agree to provide all the necessary information to us. And you can find that in our applications that are available on our website, which the address we will give later in the presentation. We have a $250 application fee. Now, there is an exception to that. We do offer an unsecured microloan program, which is up to $10,000, where the application fee is only $50. And I will talk a little bit more about the unsecured program later. You must have sound individual character. That's really the pillar on what we base our lending decisions on. You have to have a minimally acceptable personal credit score of 600. That's the floor that we start working with in terms of helping people, helping businesses get financed. You have to have an acceptable form of collateral, unless we're talking about, again, the unsecured loan program. Acceptable forms of collateral are real estate, business assets, and the one notable exception that I talked about is the fact that we do have the unsecured microloan program. And we will talk a little bit more about collateral later as well. And finally, or not finally, but the cash flow of the business has to reasonably support the loan payments. The Black Business Loan Program, the business has to be located in Florida. It has to be at least 51% owned and controlled by Black Floridians. The business owner has to be a U.S. citizen and a Florida resident. We provide direct loans up to $50,000. We can also work with your bank on a loan guarantee, which we would provide a guarantee of payment to the bank in the instance where you don't. And again, right there, we have the unsecured microloan up to $10,000. The minimum credit score is 625 on that because the loan is unsecured. All other loans are 600 minimum credit score. The interest rate on the direct loans currently range between 5 and 10% depending on your circumstances. If we do a loan guarantee, it would be at a bank rate. Now, those rates are based upon what prime is today in 2013. If the prime rate changes in the future, those rates would be adjusted accordingly. The kicker here is the loan is economically sound and will assist the business in becoming bankable, increase employment, and grow the economy. We talked about that earlier, and this is actually something that's written into the state law for the Black Business Loan Program here in Florida. The business has to be able to compete successfully with the loan, or the owner in the business will obtain technical or managerial support. We also provide the Rural Business Loan Program through the USDA. This is a federal program. In order to be eligible for this, you must be citizens of the United States. In case of you're talking about your business, at least 51% of the ownership must be U.S. citizens. We have a service area as defined by the USDA, and that is Calhoun, Gadsden, Gulf, Holmes, Jackson, or Washington County. We do have limited funds for rural businesses in other counties in Florida, However, those funds are limited to a certain extent. If you have a rural business that's outside of those 6 counties, please contact me and we'll see what we can do. This Rural Business Loan Program provides direct loans ranging from $10,000 to $150,000. The interest rates on these loans currently range between 6 and 10%, and again, prime rate changes, those rates would be adjusted accordingly. You must be unable to finance the proposed project with other means, and you cannot have any delinquent debt to the federal government. USDA loan funds may not be used to satisfy the delinquency. This includes if you have a mortgage through a federal agency like the FHA or the VA, or if you're delinquent on your income taxes. Those are things that need to be satisfied prior to us being able to finance you under this federal program. How do businesses get financed? We did have some statistics. One of them is from Inc. Magazine's 5,000 Fastest Growing Companies. It shows about 70% of businesses were financed with owner savings. The remainder were either financed through debt or equity. Entrepreneur Magazine's Hot 500 Companies basically showed about the same thing. 65 to 70% of businesses were financed from the owner savings. At this point, I will turn it over to Dr. Robinson, and he will lead you through the next section of the presentation. Dr. Robinson?
Thanks, Mark. I wanted to also share that recently regarding the financing of a business, we recently had a survey that we sent out to our membership here at the Jacks Chamber, and I'll share some of the findings. We had roughly 85% of the participants said that the source of their startup financing was personal savings, and all other sources were less than 10%, including home equity. So to your point earlier, around friends, family, savings, in most cases, that is the genesis of the business. It doesn't mean it has to be that way for everyone, but in most cases, that's where businesses look to start their financing. The other issue that I want to cover is maybe distinguish between debt and equity financing. So most small business owners, after family, friends, and personal savings, their next step is to attempt to secure debt financing. And this could include letters or lines of credit. In some cases, if you have receivables, they have different things such as receivable factoring, sale and leaseback, asset-based lending. It could be based on your inventories, and then obviously you have SBA loans. And then when we talk about equity, equity will be a stake in your company. So with debt, you are actually borrowing and you have to pay back, whereas with equity, you are more or less providing a equity stake in your company in order to infuse capital. So let's say, for example, if Mark and I had a company together and we decided we wanted to grow the company, but we did not want to take a loan. And we had the ability to make a pitch of $1 million, and we would provide them a, let's say, 30% equity stake. So for that $1 million, the investors would get a 30% stake. So now Mark and I, instead of owning the company 50-50, now it would be 35-35. Or maybe if we're really successful, I'll let Mark have 5, and maybe I'll take 65. Just joking, Mark. So those are some of the differences between the debt and equity. Now, if we go to the next slide, where we talk about the common financing difficulties. So in most cases, when we discuss common financing difficulties, it's primarily due to the age of our business. So when we're just starting out, lack of acceptable collateral, real estate, if it's our primary residence, there are loan-to-value issues there. If it's a rental property or a business property, the loan-to-value is going to be much lower than if it's our primary residence. Business equipment, inventory, and receivables, the stability of those items when we're starting out is not very stable. If we've been in business for some time, hopefully we have prepared ourselves prior to applying for a loan. And then we also have low credit score. And low credit score, that term could be misleading because some people may feel, they have a low credit score and it's 675. I mean, some credit scores are as high as, 800. Others may feel that they have a low credit score and it could be below 600. And so when you hear credit score, you need to make sure in terms of financing what's considered a range. And most lenders will tell you what that range is. And then lack of capacity. So many small businesses lack volume and capacity to carry a loan. When we say volume and capacity, one of the things is each business should have what's called a capacity statement. What do you have the capacity to do, to complete? How much work? And so if you are making a request for $1 million, does your operation have the capacity to do $1 million or more worth of work, or will the loan dissolve within the business? And if it's likely to dissolve within the business, it's going to be difficult for you to make that pitch on why you need the funds and how the business operates in a manner that will allow you to repay it. And the other item that I would cover on this slide regarding common financing difficulties, it's critical for each individual to prepare themselves to receive financing. I would say that's probably the biggest difficulty is we're not prepared when we're going for financing. If we go to the next slide regarding how microloans make a difference. So there are two impacts for microloans. One, they're going to be less in terms of volume of the loan, so $25,000 or less. And then second, with microloans, most small business owners, in terms of size of loan, do not have a need for $500,000 or $1 million loan, and there are more programs for those size loans than the smaller ones. So when we talk about the difference that a microloan can make, we think it could help more businesses. Over 90% of all businesses in the state of Florida have 5 or less employees. And so this is a target area that could have a great social impact. And if we really focused on the development of these small businesses, if each one were to hire one additional employee, unemployment would be significantly reduced across the state. And then if we go to the next slide where we have to distinguish between business loan versus personal loan. For all intents and purposes, when we start out in a business, we are using personal loans. But each small business owner has to work to start creating a business identity. So obviously you have your incorporation, your articles of incorporation. Most of us will also need to have our employer identification number, so you're not using your Social Security for everything that's connected to your business, as well as a DUNS number. And so those last two items will help you begin to create an identity specifically for your business. And throughout your operation, you'll, instead of making a loan based on your personal affairs, you'll start to move toward making loans on behalf of your business. Too often, small business owners will commingle their personal credit and dealings with their business, and that creates an obstacle for them later on because they can't distinguish the two. And when you're taking a look at your debt ratio, some will say, well, that loan's for my business. My business pays for that. But they did not take the right steps to distinguish between the personal and the business. And so as you continue to operate, you'll need to, one, distinguish between the two, and then second, understand the difference between the personal loan and the business loans. So business loans are going to be very specific to your business operation. So I will use the proceeds to, as I talked about earlier, if you received $1 million, what will you use the proceeds for? Working capital, to acquire another business, another location, potentially to expand staff size. Those are all business purpose loans. Now, if we were taking a look at a personal loan, there's going to be less inquiries as to what you're going to do with the funds because it's not attached to the business. And so overall, regarding how businesses get financed, what are some of the common difficulties, the difference that they can make, and distinguishing between the business loan and personal loan, the one key takeaway is that each individual should prepare to gain access to capital. This means doing your homework prior to the application process, identifying what your credit score may be, identifying what your business purpose is, identifying potentially the impact that this loan could have. And I'll close with this example. I need a loan of $50,000 to acquire business equipment. When we acquire this business equipment, we believe that we'll be able to increase sales by an average of 15% per year. That's a good purpose for a loan. And the ability to explain that will help clearly communicate to the loan officer and on your applications your business purpose. And so with that, I'll turn it back over to Mark for the clearinghouse referrals.
Okay, thank you, Dr. Robinson. Very, very, very informative. And yes, basically, we look at ourselves at Access Florida here as a access to capital clearinghouse. I mean, we're right in the middle of the universe of all possible financing vehicles. And there are probably more than what are shown here on the slide. If you notice, the only arrow that's not a double arrow is the one on the left that's applicant direct. I mean, if we get somebody that accesses our website and comes to us directly, that's the only one that we don't go back and forth on. And let me give you an example of that, because earlier in the presentation you saw where some of our loan limits were either $50,000 or $150,000. If somebody came to us and wanted to buy a building that was $3 million, okay, we would work with either a private finance company or a bank or the Florida Finance Network or any of those other financing entities in the universe to help get them financed, pass them off, and hopefully work with the financing institution to get that deal done through somebody other than ourselves. On the other hand, banks often receive applications for business loans from people that don't meet their minimum credit scores, because you saw earlier in the presentation where banks may require a minimum of a 700 credit score, but we have relationships with many banks around the state, and they know that we can finance as low as 600, so they may send somebody to us. That's a good example of how that works, but basically just know that we are a clearinghouse. We do direct loans, but in a lot of cases, if it doesn't fit exactly what we do, we try to find a home for you. We try not to tell anybody no outright, but we just try to find the best home for you in the financing universe. And on that, I guess sometimes the answer is you may not be ready for financing right now due to credit score or collateral issues, and we, in that case, would refer you to a small business development center or some other organization that provides counseling and consulting to help you get to that point where you will be eligible for financing at one point in the future. We have just some success stories here. CEBA CMET requested a $20,000 working capital line of credit to fund operations, while a larger loan from Space Florida was in the works. That one closed in February of 2011. CEBA CMET's a very successful clean energy company doing good things for the environment. Another success story is a Chestnut firm, a legal firm in Gainesville, Florida, specializing in tobacco-related cases, needed $50,000 for equipment purchases and working capital to fund their expanding operations. That loan was closed in November of 2008. Just Hip Hop is a dance studio requesting $30,000 for startup, and I think the important thing here is the takeaway is after 1 year they went from being not in business to having 8 employees and 74 students in just 1 year. There are many others. Those are just 3 that I wanted to highlight for you rather quickly. And a fourth one here, Naturally You, Art and Braid Studio in Tallahassee, hair care and educational services. Not only does the studio do hair, but they train other cosmetologists in the art of braiding. They wanted $13,000 in financing to move to a larger location and begin classroom services. Access Florida has an annual business plan writing contest. Naturally You was the first place winner of our first business plan writing contest in 2009. We just finished our 5th business plan writing contest, and we're looking forward to our 6th in 2014. So please check out our website for more information on that. There is the contact information for myself and for Dr. Robinson, and you can see our website there. In closing, I would just like to say that at Access Florida, we have a number of business products through our organization and through the Florida Finance Network that we can assist almost every business that comes to us. It may not be us that would be able to do it for you, but maybe somebody else would, or at a minimum, we can provide you with direction in terms of getting consulting, most times free consulting, in terms of helping you get your business in a better form for financing in the future. And we're very successful at what we do. We enjoy what we do very much, and we invite you to visit our website, look at our programs, learn more about us. Contact us, with any questions that we have. We'd be glad to help you out because, what we're all about is economic development in the state of Florida. Dr. Robinson, do you have any closing comments?
Only comment would be as you're approaching the process of gaining access to capital is to prepare both individually and business-wise.
Okay, thank you very much, and thank you for taking the time to listen to this webinar. We hope it's been informative and educational, and we look forward to talking to you again on a future webinar with a future subject. Thank you again.